I think the one item that really stood out was when we were talking to one of their customers, I asked him, how much are you guys paying for the product right now? And how much would someone have to pay you to go to a competitor or just get off their product? And he said, you would have to pay me 3 times what I'm paying Genetica and all up front to get me to switch. I was like, done.
Oh my God, who is this customer again?
Yeah, give him a call.
Welcome to Inside the Deal, the podcast where we explore how funding rounds come to fruition from start to close. I'm Adam Hardy from Sandhill Markets.
And I'm Steph Moy from PIN. Our head of growth, Daniel Wiegand, and I are teaming up to host this podcast with Sandhill Markets. Together, we sit down and discuss the intricacies of how venture funding rounds come together.
Tune in to hear how investments are formalized from both the founder and investor perspectives, from initial conversations to final close.
Whether you're an investor or founder curious about the fundraising process, please enjoy the episode.
Welcome to another episode of Inside the Deal. I am Daniel with PIN, and I'm joined by Triet from Render Capital, as well as Christian and Ben from Genetica, which is also a portfolio company of Render Capital. So thank you guys so much for being here. Really appreciate it.
Thanks for having us. Thanks for having us.
Thanks for having us.
Awesome. Yeah, so I guess to start, let's start with Christian and Ben. Would love to hear a little bit more about your guys' background and what it is you guys are building with Genetica, just for some context.
Yeah, so Ben and I, contrary to popular belief, we are not brothers. Most people do think we're brothers, especially since Ben hides it really well with his hat, but he and I go to the same barber. Actually, Triet goes to that barber as well. Yeah, so a little bit about me, just quickly. I grew up in Silicon Valley, working in early stage tech, primarily on talent acquisition, human resources, mergers, acquisitions. But I've always kind of had one eye towards the cannabis space, which is a really fascinating and interesting industry. And when you grow up in Northern California, it's like Starbucks. There seems to be cannabis on every corner. So, ultimately got brought out to the Midwest, Kansas City, which was great because I was a diehard Chiefs fan growing up in the Bay. And so it just worked out perfectly. And by a big ad agency, took over a lot of their talent acquisition and human growth expansion business. And then, so I've been working in tech, around tech, primarily focused on human capital.
And my background starts in finance at Citi Group. I was in equity derivatives and securitized products and realized that I wanted to move into the tech space and use my financial background to do that. So I did that through a jump into VC. My first foray into the VC world was through the ArcView Group. They're the oldest and largest investor network specifically for cannabis, and their venture fund as well. Led deal flow and due diligence there a couple of years, which gave me a great crash course in the industry. And cannabis had always been something that I was passionate about, but until then didn't really realize that could be a career as well. And so, from there, went to a family office, focused on alt health more broadly. And that's when I reconnected with Christian. And he pitched me on the current concept. And I was like, oh, yeah, this is the one. I got to be a part of this. And, joined as an advisor initially. And then, a little over a year and a half ago, joined full-time as CEO.
Fantastic. And give us a quick rundown of Genetica and what it is you guys do.
Yeah, go ahead, Ben. You're up.
Yeah. So we help both retailers and consumers make more informed decisions in the cannabis industry. So whether that's finding the right product for your needs, what kind of effects you're looking for, what kind of medical concerns you're trying to address, we help to pair customers with the right product based on what's in stock and what their needs are. And on the operator side, it's helping to make more informed decisions through data. So it's that consumer data, what those preferences are, and then it's connecting all of their systems into one place to give them one screen to look at, to work out of, and layering in that customer data to help make those decisions around stocking and staffing and when to reorder and how much and all of those kinds of things.
Oh, super interesting. And what stage are you guys at as far as like funding cycle? Was this a seed round or pre-seed round?
Yeah, so it was seed round.
Okay. Gotcha. Yeah. Awesome. And Triet, tell us a little bit more about Render Capital.
Yeah, so we're an emerging fund out of Southern Indiana and Louisville, Kentucky. $30 million under management, and we divide that into 2 separate sides of the house. One side is a community fund where we're more economic driven than return driven, investing in companies that are in Louisville, Kentucky, or they're willing to relocate. On the other side of the house is traditional VC, where we're able to invest in early stage, so pre-seed through Series A is our sweet spot. Industry agnostic, though we won't touch anything in devices, hardware, or heavily regulated spaces like life science or biotech. We are geography focused still, so we won't touch anything in New York, Boston, or the Bay.
Very cool. And your point about vices, we've come a long way, because I feel like 10 years ago, this probably would have fell in that category. But let's dive into how this all came together. And Christian, how did you guys get in contact with Render Capital? Were you familiar with them from the start? How did that process take place?
Yeah, that's a good question. So, I think first it's important to highlight the geographical focus that Triet had mentioned. When you are an operator in sort of the middle of the country and down south, you obviously don't have the same level of exposure to, VC, private equity, early stage capital. And when you do, it tends to be not domain based capital. So it's really, really hard. It's become increasingly easier as more and more regions, like the work that Render's doing right now, and really in all of Kentucky, but with a focus on Louisville. They, which I'm not going to say Louisville. I know that's like such a California thing to do. So I know Patrick's going to hate it if he keeps hearing. He's like, why do these guys keep saying Louisville? You really do have to kind of go dig deep when you're doing your due diligence, which is something that I think a lot of early stage founders don't do. They just kind of spray and pray on the outreach front. And we got hooked up with a really cool platform that is meant to kind of expose you as an early stage company with a lot more granularity. So you're kind of putting your numbers out there for investors to see. They're looking at the team, bios, traction, everything. I know Render had built a profile and I'll let Treat speak to that more, but we got connected through that platform. And I remember at the time, Ben and I both, we were very much like, I want to say towards the end of the round. And, we had kind of written off this concept of, VCs or, sort of institutional capital to a degree, let alone in the Midwest. But then we jumped on the phone with Triet and we'd done our research on Render, and it was I'm a little biased because they're on the cap table, but I'll say it was a match made in heaven, which we tend to know a thing or two about matches given our software. But it was a really organic conversation, which is I think a rarity, and that conversation kind of opened up the door for us where we were like, well, maybe there's more here than just a potential check, and obviously the nature of our industry at times too, even though we're non-plant touching, it really, that makes it even more increasingly difficult when you're raising, because a lot of the, sort of the thesis, the focus, the do's and the don'ts of a lot of funds, and when they're raising from LPs is, hey, we won't touch anything that even looks remotely like, yeah. So, but that's how we got connected, and Ben being the numbers. And I was like, I'm always trying to find a very poetically perfect way to say it. Ben's like a super geek when it comes to like data and numbers, which thank God for that, because it balances me out. Ben started like looking at like more than just their ethos and who they've invested in, like what stage did they invest in? Like, what can we look at as far as like the position that they took, whether it's, total capital allocated or, did they take a board seat? And if you follow Render, you pick up very quickly how much of a focus they have on economic growth and impact. And that's something that's always been really important for us, especially Ben has always spearheaded programs like that at some of the companies he had mentioned. So we just, we were like, all right, it's time to kick the tires. And and so that's how we got connected and where everything started.
Super interesting, especially because I feel like for most people, like those platforms don't work depending on which one you're using. So if you're open to giving them a shout out, I feel like for founders out there listening, I feel like that would be super helpful.
It's a Go Global World. It's an interesting platform. It's not without its growing pains, and it'd be nice to have this or that. But yeah, Danil, who's the founder, he literally, I think he should get more credit because he built the platform for circumstances like ours and how we came to be connected with Render. But you're right. I mean, a lot of people jump on and, I feel like every other LinkedIn message on my feed is like hey, I've got a massive Excel spreadsheet of VCs.
Totally.
Just comment here. And I'm like, the game is definitely changing, and that's a whole nother podcast to talk about that. But I think we've always really tried to focus on building the relationship early on. Most just forget the sort of I do, and then it's like, okay, now you walk back down the aisle, and so this was a platform that really allowed for you to gain a little bit more. It was almost like cyber stalking your day before you show up to the dinner, so you get a better understanding of feel, fit, and vibe. Admittedly, I don't think we've ever told you this either, but like I think that when we jumped off the call, we were like, "There's no way they're not going." I mean, it's just not possible. But we would definitely say yes. I think part of it is also getting to know the people in front of the capital, and doing our research on Triet too, and just like knowing where he came from. Is down south and working on more accelerator style programs. I'll let him speak to that. But, we thought that there was more that could help to accelerate beyond just here's a check. And we wouldn't have been able to get there if it wasn't for this platform. And there's a lot of other platforms out there like it.
Yeah, and so on the Render Capital side, Triet, what about them stood out to you? Because I know on a lot of those platforms, there's so many options, and you're just like kind of breezing through either decks or memos, things like that. So what was it about Genetica that initially stood out and made you want to take that first call?
Yeah, I think it's really surprising that, we have our profile on there for like what our thesis is, what's a good fit. A lot of times, I would say 80% of founders just doesn't even read it, and they'll still send in comments and just like send their information. I look at it. I don't reply for most part. Sometimes I do just because I like what they're doing, but it's not a fit for us. Christian's comment was super short. It was, hey, we're in Kansas City. This is where we're at. Would love to have a conversation. Here's a deck link if you're interested. Like, okay, like checked all the boxes. Like, okay, it fits in our thesis. So tells me, thank you for putting in the effort. You're very conscious, willing to like put into the time and effort to select who you want to work with. Look at their pitch deck. That was really interesting. And it was like kind of fits my personal thesis of, software trying to serve a archaic industry that a lot of VCs don't really care about, which right now is dispensary, like back office stuff. And I love data analytics play. So it's like, hey, got to have a conversation with these guys. And then I think on the first call, for me at least, it's sort of like a vibe check. I like to keep it very conversational, trying to figure out. I'm a pretty big sport fan, so I do F1, fantasy football, and now I'm a Manchester fan because of Ben. But what I'm trying to figure out is, if it's 11:30 on a Sunday, I just wrapped F1, I forgot to set my fantasy lineup, and the games are about to start. If they call me with a problem, is this someone that I want to just say, you know what, screw it. Let me throw away the fantasy game, no football, and just go in the office and work with them. So, after that first conversation, I was like, yep, definitely want to work with these guys. We vibe, we get along pretty well.
Yeah, I mean, it's so much of a relationship game. Everyone always says it, like you're going to be, working with this person or this team for the next 10 years, if not probably more. So that, makes total sense. So I want to let's dive into sort of like how that first meeting goes, because Christian, you mentioned earlier that you felt like it was like a no way. So curious on both of your sides, walking out of that meeting, what made you feel that way? And how did you actually approach that meeting? Did you do a deck walkthrough, or was it more conversational? Curious how you did that. And was that different than what you normally do?
Yeah, I'll throw it over to Ben for the contents of the first meeting from his perspective. But I think for us, we always try to do as much preparation as possible. To the earlier point, I think when you look at the broader landscape and just like sort of the rise of, angel and syndication based investments, it's, it feels like everyone is a potential investor to a degree. And I think that a lot of times people just kind of get swallowed up in, fast money. And there's pros and cons to both, methodologies, but we definitely try to think through situational, investment from a receiving standpoint, which I know may seem odd, but it's like to the example that Trent gave around, which by the way, he is headed to a life of just disappointment and despair now that he's a Manchester fan. Ben is a diehard fan, but yeah, I mean, I think we try to say if the money wasn't a factor, where is the value add? I think when, for us, we were just really drawn to their sort of community and impact focus, like from an economic perspective. I mean, it sounds good on paper and everybody wants to, talk about it. But I mean, if you actually look at that section of, their material they have on their website, like they take it a step further. And we were like, that's a big gamble because you're really, you have this thesis, you have to return cap, what that risk profile looks like. But you're also placing these bets, into, people. And I think that was something that was really attractive for us. And so I can remember in prepping for that meeting in particular, we definitely wanted to make sure that we let, the, Render and the, Triet, but Render as a whole know that we're people before we're anything else. And, we're the first to admit when we should be doing something better. We're also the first to pick up the phone and to call an investor and say, hey, we might have messed this up. Like, what should we be doing here? Or, in the case of what most investors want to see, call before you mess it up and say, hey, I'm thinking about this and this may mess this up. What do you want to do? And the vibe was really, really good for sure. I think my takeaway on why I was like, dang, I don't know if there is, I think it was just more of, industry specific, and less the, so I thought it was gonna be more around like specifics within the thesis, but definitely not like the vibe. Like we got a good vibe. And I think Ben and I both kind of just were like, hey, win, lose or draw. That was an awesome conversation. So yeah, I mean, I wouldn't say we did anything different than we normally do. But Ben and I are pretty close on stuff. We have difficult conversations. We had a difficult conversation before this podcast. We have difficult conversations. We have, happy conversations, but, investors are an extension of our team, and, we look at them for the domain. And sometimes it's something as simple as, hey, are you going to be able to go to a conference and work a booth with us? And, while not all of them can say yes, we want to make sure that we get that out on that first call. Like, how far are you willing to go to be a part of what we're building? Now, obviously that, that also comes to the level of respect that you're not bombarding your investor every single time. Like, I'm not going to let Triet know that we're potentially looking at launching a fantasy football for our investors, because, well, then we may need to be calling him on Sunday afternoon. Depends on if I'm playing him, I'm calling him. But I'll let Ben speak to that first call as well.
First off, totally agree around the feeling of uncertainty was more so around the geography, right? Like a fund out of Kentucky and Southern Indiana, like there's no way, right? Like there's no way. Just the climate down there for the industry that we're in is difficult. And so it wasn't necessarily that anything happened in the call. Quite the contrary. Like I think the best meetings are a combination of pitch deck and just conversation. And that's exactly what it was, right? It's like, you don't want to be too heavy on the slides and too light and just conversational as well. Then there's no substance, right? And so it's the perfect mix of like that kind of combination and bouncing off of each other. And we left feeling really, really good. I think that the lesson for me as well is like, you can't come into those calls with any preconceived notions. Every single conversation has the potential to lead to the outcome that you're looking for. And so it's important to leave no stone unturned and to make sure you're exploring all avenues.
Which I think of note, Ben. Ben is the first investor that I actually ever reached out to when I was first starting.
Oh, interesting.
And he said no. So now he's my best friend, my co-founder, an investor, and everything in between. So I will echo that, and that preconceived notions, you want to throw those out the window.
Yeah, and you can't be afraid of a no either. You're going to get so many of them, and can't let it, stop you in any way. And then, so Triet, what were your guys' initial thoughts on that first meeting? And what were that maybe hesitancies? What did they do really well, and what eventually got you guys over the finish line for them?
Yeah, I think for us, they sent their pitch deck early, which I love because like it makes the conversation so much more meaningful. It was very clear that they know their stuff. So for us as a generalist fund, we have range, but we don't have depth. And a lot of times I'll talk to founders and I ask, hey, break this down for me like you're talking to an eighth grader. And where I kind of noticed that true experts in their field are able to do that, to simplify things. They don't get frustrated. And when we came and talk about the product and the software and pretty much all their stuff, yeah, they were able to break it down super elementary level. I could understand it. And I think it was like a good balance between Christian and Ben where vision, quantitative, and it was just like a good conversation where I was able to get both. So it felt like I was able to do like two calls in one. And then again, it was very conversational. I don't think we even walked through a pitch deck. But after that, I was like, yeah, I would have a second call with them. Product's interesting. Traction is pretty, where you guys were at was pretty interesting. It was still pretty early.
That always helps.
Yeah, earlier than we typically come in. But you can kind of just tell that they were the guys that was going to figure it out. And traction is just going to be a lagging indicator later that for us, it wasn't as big of a concern. And I mean, you guys proved me right with the Q2 updates this year. So that was pretty nice. But yeah. And then pretty much what got us over the fence really was, well, right after the call, I walked over to our managing partner's office. And I was like, I know we can't do vices, but technically they don't touch cannabis. So what's going on? And then he's like, we looked at the website. It's like, okay, yeah, I think we can clear that from our LPAC. And then we had a deeper conversation in our weekly investment committee meeting. And yeah, team wanted to have another conversation. And then we did a lot of diligence and, whether it's from investors and customers had great things to say about the product, their working relationship. I think the one item that really stood out was when we were talking to one of their customers and I asked him, how much are you guys paying for the product right now? And how much would someone have to pay you to go to a competitor or just get off their product? And he said, you would have to pay me 3 times what I'm paying Genetica and all up front to get me to switch. I was like, done.
Oh my God, who is this customer again?
Yeah, give him a call. And then, so at the end of that first meeting, did you tell them that you wanted a second meeting, or how did you guys end it? Because I always feel like you never know, right? Sometimes everyone is like, or a company will say, yeah, I would love to have a second call. How did that end? Did you let them know that you were still interested, or how did you guys approach that?
Yeah, so I mentioned to them our process, and I think we talked on like a Thursday or a Friday, and usually on Mondays are when our investment committee meetings happen. So that's usually when I get to pitch the companies that I'm most excited about to the team. From there, it's a yes or a no. Occasionally, it might take us a couple weeks to get experts into the room to double check some of the stuff, but for them, it was, oh yeah, let's book a hour presentation with the rest of the team. So I think I let you guys know either Monday night or Tuesday morning is usually my cadence. So.
And so aside from the rest of the team getting to know them, what were the initial, I guess, maybe hesitancies besides the Vice things? And what did Ben and Christian do to help sort of like dispel those concerns?
They have a very interesting revenue model. And I think that was the biggest concern was the lag between when they book a customer and when it realize. So that was something that we dug pretty deep into when we were in diligence, and it kind of like came to light when we were talking to, I don't think I told you guys this, but we had to go outside of y'all's references to find an investor that told you guys no. And at that point, they're unbiased. So we're like, so why'd you guys say no? And for us, realizing that, oh, they said no only because they didn't truly understand the revenue model and that math didn't make sense. For us, we're like, okay, so we get the math, we understand the model, we kind of see something that other folks aren't seeing. So that kind of creates, for us at least, like this huge edge when it comes to investing in the space compared to some of the other VCs. So that kind of like nudged it over where we're like, well, if we're wrong, we might as well be completely wrong. If we're right, we'll be completely right, instead of let's be right a little bit.
Yeah. So, okay, you guys have decided to work together. How did you guys think about this round as a whole? How much did you guys have left in the round? Was this sort of like the last check-in? I know you mentioned you had already had some committed capital, but curious, like your just general thought process around this round as a whole.
I think part of it is for what was just mentioned, the way our revenue model is structured, it's a bit of a gamble or in the earliest days, because it was one that was very much geared around, we want to show and reinforce the value to the client before we say, okay, now pay, which I think is really tricky, especially in industries that dimes look like dollars, to them on their balance sheet. And we knew that we were going to be giving something to get something. And as a result of that, that's why we were like, okay, we found product market fit. We need to raise, to really scale and to fulfill on this. We set a number, I think a baseline originally minor, I say minor, I might have been at $1 million, maybe a little over, Ben, I think. And then we had this really interesting thing happen where we had quite a bit of investors that were pushing term sheets our way. And it really felt like we kind of were like the wheels had kind of come off for a second, because we weren't controlling where we felt like, okay, wait, no, but this person does this or this. It was like, the matter of due diligence in our process, because we had these term sheets, which we were extremely grateful for. And it's always the ones that said no that I remember the most, I can tell you. But, because I'm like, oh God, what did we,
So did you guys have term sheets you turned down?
Yeah. We turned down, actually, I think in all we turned down, and Ben can check me on my math, but it would have been about double what we ended up actually closing in the entirety of the round. I think when you look at the bucket early on, you're like, okay, in a perfect world, we have a high net worth individual. We have a fund that can grow with us, right? As we, grow, and if there's a need for follow-on round, which is definitely something that we know we were going to need, and then you want, maybe an angel group, or maybe you want, domain specific investment. And so we started to check all these boxes, and it became less about the amount, knowing that we had the integrity of the cap table, given the valuation really in line with what we felt comfortable with. And I think that happens a lot of times too. And that was definitely something that was really big for Ben and I. And I think for our shareholders as well, was thinking about how much, we need to be protective of who we are, bringing onto the cap table, as much as investors are making sure that they're being protective of who they're deploying their LP's money to. And so we felt like we had all the boxes checked, less really an institutional. And I would, I know Render, I don't know if I'd say that they're the institutional investor, but I mean, they are, a fund that, is pretty active. We would put them in that category for what we were raising. And they were not in cannabis, which was a really big plus. And then, maybe unbeknownst to Render at the time, but we knew Kentucky was going to legalize too. And, so we were like, God, wouldn't that be great if Kentucky legalizes? And then we have and it was, and Ben was like, they won't do it. They're Kentucky, Indiana. They're going to be absolutely no way, which is lends to why we were like, dang after the first call because we really enjoyed it. But I would say that, it's really important to as a founder to be a protector of the cap table and to be mindful of scenarios and analysis. A lot of times you see especially if you've got lightning in a bottle, you raise so much and you have such dilution, and dilution is just a reality of it, right? I mean, we wouldn't be raising if we could just write a check ourselves, or a number of other reasons. But you want to make sure that, the founding team is really incentivized to grow and to scale beyond just like, hey, I own 2% of this one,
Yeah.
a lot of different methodology there, right? Because like then I've had people come back and say, well, yeah, but Sergey owns 6% of Google. And I'm like, well, yeah, dude, but how many Googles are there?
Yeah.
And so I think it became with Render, we kind of threw logic out the window as far as what we had kind of earmarked. We're like, okay, this is what we feel comfortable. This is what we were. And so there was this like hell day. Do you remember, Ben, Ben is like gone, and we literally set a deadline, and we were like, this is when we're going to stop accepting term sheets. And then Render came in really in the 9th hour, but we found that we were like so drawn to Render. And I would say that even if Render wasn't on the call and our incredible partner in crime here in Triet, but like it was just became more clear to us that we needed Render from what we felt like they could provide us with from an oversight. Like as great of conversations as it was, and knowing sort of their check size, which he's always very transparent about, we also were like, this is going to be like a very holding your feet to the fire, high levels of accountability, wanting what's in the best interest of the business kind of investor. And that's what we want that. Not that we don't have that, but we're like, we want that at this scale. And so I think we kind of abandoned what we were originally anticipating raising. And we were like, screw it. If they throw $100 our way, we'll take it. And so we did bump. It was funny. We bumped one other investor who, to make room for some of the allocation they had taken, because I think we actually thought they were going to come in for a little bit less. And then they came in for a little bit more. And I'm like, oh my God. And Ben and I were just elated. And I was like, oh snap, I got to go.
Someone's got to go.
Who goes? And, but it all worked out in the end. That individual ended up coming back in on, participating in another round. So it was great.
We recognize that that's a privileged position to be in, protecting from dilution and surrounding yourself with investors that, have a value add is all part of the game, but not everybody has that luxury in a lot of cases too. And so, we're very thankful for the ability to have to be able to make those decisions, because not everybody does. But we had hit our number, our target for the round, and we're like, okay, well, if they come in, great, and if not, like we're set. And to your point, when they did, it was just general elation, because it was a great fit.
Yeah.
Yeah, I feel like it's always interesting to me to hear how sort of like the back end of rounds come to be, right? Because you want strategics in different aspects or industries or networks and things like that. So you do have to be very particular with who you take money from. And I think you absolutely nailed it, Ben, where this day and age, you need to provide more than just capital to get and win allocation in the deals that you want to. For Triet, how does Render think about that as far as maybe leaving room open for other strategics to help the company versus, hey, we would love to take the rest of this round? And then with this check, do you guys have a standard check size, or how do you guys sort of deal with those types of things?
If you asked me this question in the early last year, our average check size was $250. However, midsummer, we reconnected with one of our largest LPs, and it's crazy how to hear LPs think, because they think in like terms of decades and like 2-3 funds in the future. And we're talking about deployment strategy, and something that he wanted to see out of us more, that we listened to his advice, considered it, debated it out with the team. Pretty much, he was really happy with the companies that we picked, but he wanted to see larger swings. So that's when later in the year we shifted up from 250 to 500. We can be coming in as low as 250 or as high as 750. I would say that we don't have that sharp of elbows when it comes to capturing certain ownership, stuff like that. It's just, this is what we like to take, and this is what the math makes sense for the return profile that we model out. But then again, like if Ben and Christian came to me, it's like, hey, love that you guys want to come in for $500,000, but we need X amount of allocation for these investors because we really just want them on the cap table. And here's why they're strategic, et cetera, et cetera. We wouldn't be against it. I was like, okay, we would probably just take that smaller bet and then give them a heads up like, hey, if we do invest in a follow-on, because we took a smaller bet this time, ideally we would like take a larger position if we do follow on later.
Yeah, makes total sense. And I feel like that's how most investors should think, right? If it's going to end up being beneficial for the company regardless, it's in your best interest too. But obviously you can see both sides of that as far as wanting a certain percentage. And so let's talk about value add. We've sort of touched on this a little bit throughout sort of the duration of the conversation, but specifically on both your ends, Trey, I'd love to hear what you guys sort of push for as far as like, this is what we provide outside of capital. And then Christian and Ben would love to hear on your end where you've really sort of like pulled on that extra value add.
For us, because we're generalists, we're very transparent in the first, second round of meetings, right? It's what do you need help with? What is your ideal profile of the investor that you want to work with? And if founders mention like, this is what we want from them, and it's not a fit for us, then usually we'll just pass, right? Because for us, when we do invest, typically we push for a board seat, if not a board observer seat. So if we know we can't do anything, there's no point of us pushing for that involvement and then just wasting our time because we don't get paid to be on boards, and it's a waste of their time as well. So we were very transparent, like, hey, we got range, we don't have depth. If you ask me to how to build out the best way for your analytics system, we are not the folks. Now, we're decent at making investor intros, and coming from, Kentucky, Indiana, and Texas, we told them like, it's not legal here. We don't have that much of a great connection. It might be legal soon. We have a CBD shop downstairs who I went in there and asked them to help us run diligence. Like, hey, if you sold more CBD and cannabis, like, would you buy this? So he gave us feedback, and I think we connected them to you guys. But yeah, we like to say that we're reactively active investors. You need to tell us what you need from us in a very exact way. Please don't beat around the bushes. Both of us are from Texas, so just shoot it straight. And it's interesting, Ben and Christian actually don't ask for a lot of help. So haven't really had to do much other than a couple of like brainstorming session, and that's pretty much it.
And so Christian and Ben, on your guys' end, right? It sounds like the value add was a big reason that you wanted to take the render check. So curious, I guess, why haven't you tapped them? Has it just been not the right time or not necessary? I know everyone wants to, be mindful of everyone's time, but curious just how you've thought about that or sort of navigated that with render.
It's interesting because we haven't necessarily tapped them, but they've been very proactive in making intros when they come across. I think, when there is, especially for a generalist portfolio, when there's one company within a very specific niche, anyone you come across that could be mutually beneficial, it's easy to make those immediate connections. So that there have been some awesome intros, especially on the medical side that they've made, but it's not, it's not necessarily something that we've asked for because we know, we've got domain experts to make intros to sales clients or partners or whatever else. So I think as we go through this next phase too, as we gear up for a Series A and those kinds of things, there's probably going to be a lot more calls and strategy sessions coming down the pipe. But, for now we were happy with them sending us, some intros here or there. And actually that's happened through like last week even. We were in calls with some folks in Israel, and Triet proactively made an intro to a fund out there to help us get the lay of the land. And heard that in the board meeting that we were thinking about that, and took it upon himself to make the connection. So, it's nice to just be top of mind and get that helpful advice.
Yeah, absolutely.
I'm trying to think about like I think the last time that I reached out, I had done it in the Slack community. I had reached out to you and Patrick, and I had said, "Hey, would it be possible for us to throw an event with a bunch of people in the cannabis industry in your space?" And you guys were like, "Yes, yeah, just tell us when. What do you need?" And I'm like, "Don't worry about catering or any of that, unless that is another service that's provided by Render, but most likely not. We will take that on." I think it's like right now for us, it's what we needed more of was just over the last quarter and this quarter, and then towards the end of the year, we're just growing. And so having those, hey, we need this, can you do it? And they're like, yes, or they'll say no, or let me check. But yeah, the introductions alone and proactive at that have been extremely valuable for us. And also, being in a board observer, I mean, we just had a board meeting, like 2 weeks ago or something like that, and, getting good advice. It's always great when you're either going to get, especially when we did it remote, you're either going to get an email that says, "Boo, do better," or you're going to get an email that says, "Yeah, okay, all right." And it was good to get, sort of the constructive, I would consider, positive feedback from Triet and Render.
Yeah, that's awesome. Sounds like you guys have a great working relationship, which is always great to hear. And so as we wrap this up, guys, for Ben and Christian, for all the founders out there listening, what was, one of the biggest lessons that you learned from this fundraising process? And maybe, one piece of advice you would give founders who are maybe in your shoes, 6 months to 12 months ago?
I try not to think about those days as much, Daniel.
Makes sense.
Those are the before Q2 days. No.
Yeah.
Well, I think it goes back to what I was saying earlier around you just never know. I think it's an extension of what I've seen throughout my career, that seemingly random connections where you're not necessarily sure where it's going to go have led to the most impactful moments in my life and my career. And so it is really, really hard to put yourself out there and get turned down by 99% of investors, but you got to keep that internal North Star pointed in the right direction and keep plowing through, because what you have is important. And I think I was just looking at some statistics around this pretty recently. It's like 1 in every 33 investors is going to actually like take a call. And when you have those odds facing you, the way I've been framing it is like you gotta kiss a lot of frogs to get to the prince or the princess, right? And it's about the number of at bats, and the power law is very much in effect.
Yeah, and I would just say, just through our process with Render in particular, I think actually another one of our investors always says everybody has a plan until Tyson hits them with a right hook in the ring, right? I think you have to be open to conversations just as much as you're hoping that the other side is open to receiving an initial call or having that initial call. I think you have to be open to putting yourself out there fully and completely. Like I always joke with Ben that, like, when we were doing our cold outreach, or if we were reaching out to investors, we were getting connected, I almost feel like we're like B Rabbit from 8 Mile, like that last mic battle where he's like, "I already know what you're going to say, so let me just get it out there in the open."
Yeah.
Like, yes, we do work in this industry, and yes, this is
I love that analogy. That's a great analogy.
I mean, it's just like gets it out there, right? And I think it's not an adversarial relationship. It's not supposed to be an adversarial relationship. I think, from the render's perspective, like a fast no is so much better than a long drawn out maybe in our world. And, days feel like years as far as the decisions that we need to make. And I really respect that, Render was always very transparent with us about process structure. It may not have been as fast, it may not have been as long, whatever it was or was not. There was never a sort of, well, we don't know. I mean, even if it's like, hey, not there yet, don't know. It's like that level of communication helped us tremendously. And so I think, for founders, it's like you can't be afraid to ask for updates. You can't be afraid to ask for the close, just like when you're out there selling something. I mean, the worst thing that's going to happen is someone's going to say no. But to Ben's point, I mean, there are plenty of relationships that have really benefited our organization that started with, hey, we're not going to participate in this round. So, I would say there's a billion different points that founders need to deal with. I think the first one is like own your reality and speak your truth, and then be receptive to, a no turning into a longer relationship, as evident by, Ben, who, turned me down and I godfathered him, made him an offer he couldn't refuse. No, I'm kidding. But yeah, so Render made that very clear from day one. Look, we're transparent above all else. We'll let you know if it stops here. And either way, you can continue to, reach out, keep us in the loop, no matter what the outcome is. And we respected the heck out of that.
Fantastic. Well, guys, this has been extremely insightful and very fun. And I very much appreciate you guys all taking the time here. For Ben and Christian, if there's any investors, entrepreneurs, potential customers out there, what's the best way for them to support you or get in contact with you?
Definitely get out there to your local dispensary and buy, because chances are our software is part of it. No, I from my vantage point, you check out our website. We're actually in the process of launching our new one, which I'm really excited about. But it's just getgenetica.com. And otherwise, you can find both of us on LinkedIn. I don't know, Ben, do you want to give everyone your cell phone number?
Yeah, it's 555.
Awesome. And Triet, for anyone who might be a fit for Render Capital and matches your thesis, what's the best way for them to get in touch with you?
Yeah, it's just my first name at render.capital. I do ask, please at least check out our thesis before you just blow up my inbox.
Awesome. Well, again, guys, this has been super fun. Really appreciate it. And we'll catch you guys next time on Inside the Deal.
That's a wrap for this episode of Inside the Deal. We hope you learned more about how these rounds really come together.
You're also invited to check out PIN, the easiest way to invest in startups with your community, whether you're accredited or not. Learn more about us at getpin.xyz.
If you enjoyed this episode and are looking for more venture content, make sure to check us out at sandhillmarkets.com. We run a weekly newsletter, live events, investor syndicate, and other great podcasts like this. Thanks for tuning in.